Hey there, how's it going? I'm Jason. I'm your host. Welcome to the week in YouTube Finance.
Our interest payments are higher than our Defense Department budget. If we didn't do something about this, then there won't be any money for anything.
So what if the safest, most stable investment in the world, the foundation of pensions, retirement accounts, and entire countries, is starting to break?
But the longer term is still uncertain, and the market response to the back and forth has been volatile, especially when it comes to the bond market.
You are going to see a crack in the bond market, okay? It is going to happen. And I tell this to my regulators, some of who are in this room, I'm telling you it's going to happen, and you're going to panic.
Now that was Jamie Dimon, the CEO of JPMorgan Chase, which manages about $4 trillion in assets. And he put out one of his most serious warnings, and he's not alone. We're already seeing huge cracks overseas. In Japan, the 30-year government bond has erased about half of its value since 2019, going down by about 45%. Just in the past year alone, the interest rates went up by 100 basis points, causing unrealized losses for Japan's biggest life insurers. Now, in the United States, we have over $36 trillion in debt, a debt-to-GDP ratio of about 124%, and yearly deficits pushing above 6%. Now, for context, that is more than double the 3% level economists usually say is sustainable for a healthy economy. And if Japan, which was once the center of global financial stability, the country that lends its money to all other countries, is flashing warning signs, and JPMorgan is sounding the alarm here at home, I think it's worth paying attention to. Because if the bond market really starts to crack, it could threaten way more than just your investments. It might unravel the entire global financial system. Today, I'll break down exactly what's happening behind the scenes, why this is so important, what it means for our money, our future, and how I'm personally investing. So with that said, let's get into it. For me, at my age, at my risk level, at my current situation, I just buy the US stock market via an ETF called VTI because I think it stands to profit no matter what the outcome is. But if all of that is wrong and we're going to pivot into a new economic system, I also buy Bitcoin because it stands to become a lot more valuable if the assumption is we try to print our way out of it by printing more base units to increase our base monetary supply. But I also own real estate, and I have some cash on the sides just in case everything else fails, and maybe there's some opportunity. But each bucket of my net worth represents anywhere between 20 to 25%, and that's how I'm personally playing this out. Obviously, that's not necessarily going to work for everyone, but that's my approach. And I think at this point, not owning any hard assets is more risky than owning them. And by hard assets, I'm referring mostly to things like gold and Bitcoin. My hard asset of choice is obviously Bitcoin, but it's not for everyone. However, if you are new to Bitcoin and you want to learn how to buy it, how to store it, how to protect it, I have a step-by-step guide that shows you how to do that. You can use coupon code Andre40 to get an additional 40% off the purchase price. As always, I'd love to hear your thoughts. I hope you have a wonderful rest of your day. Smash the like button, subscribe if you haven't already. I'll see you soon. Take care.
Meltdown. The Elon Musk and Donald Trump alliance has gone up in flames. Total and utter flames.
This morning, a growing rift between the president and Elon Musk.
I'm very disappointed in Elon. I've helped Elon a lot.
We have all wondered when these two would fall out, but could anyone have predicted that when it did happen, it would spiral so fast?
Look, I don't know what happened in 24 hours. Everybody can draw their own conclusions about that.
What's up, you guys? It's Graham here. So this is not the video that I was planning to post today, but over the last 24 hours, all hell has broken loose and Elon Musk is going head-to-head with Donald Trump. Normally, I don't cover topics like this on the channel, and I prefer to keep it specific to investing, personal finance, and real estate. But the fact of the matter is, what's being said is having a significant impact on the markets, with Tesla stock plummeting as much as 17% in a single day and Elon predicting a recession towards the end of the year. Plus, I'm not gonna lie, there are some valid concerns with the unsustainability of endless money printing, which is a topic that's actually worth diving into. This is why we really have to talk about exactly what's being said, the problems with Trump's new tax bill, why Elon Musk now wants the president impeached, and what this means for you watching. Because despite the market falling, there could be some seriously good buying opportunities if you know what to look for. Although before we start, if you appreciate one-off videos like this, it would mean the world to me if you hit the like button or subscribe if you haven't done that already. Doing that gives me a really good indication if these are the types of videos you want to see more of, and as a thank you for doing that, I will do my best to read and reply to as many of your comments as I can. So thanks so much, and also a big thank you to Magic Mind for sponsoring this video, but more on that later. Alright, so in terms of where this begins, let's start here with Elon Musk. I think it goes without saying that Elon has been a huge proponent of getting Trump elected in 2024, reportedly having spent over $250 million to make this happen. In fact, throughout most of Trump's campaigns, Elon was right next to his side, and with the help of his influence on X, it's pretty safe to say that there was significant pull to win the election. And this is where things get very interesting. Shortly after taking office, Trump put Elon Musk in charge of the Department of Government Efficiency, with the main goal of lowering the federal deficit, cutting wasteful spending, and making sure our tax dollars were put to the best use possible. In fact, within the first few months, Musk's team fired or bought out about 250,000 government workers to eliminate wasteful roles, and they initially went in with the expectation of being able to save $1 trillion. But pretty soon it became evident that the cost-cutting measures were falling short. His own companies began receiving significant backlash, and he was quoted as saying, "Being attacked relentlessly is not super fun. Seeing cars burning is not fun. In the grand scheme of things, I think we've been effective. Not as effective as I'd like, I think we could have been more effective, but we've made progress." Since a lot of this is changing by the minute, feel free to leave a comment down below, and I will do my best to read and reply to as many of you as I can. And also let me know if you enjoy these slightly off-topic breaking news videos, and if enough people enjoy them, I'll do more of them. So thanks so much, make sure to hit the like button, subscribe, and until next time.
The housing market just saw its biggest shift since the pandemic. Take a look. For the first time in 12 years, home sellers outpace home buyers. That means yes, price cuts are finally here. That's good news if you want to buy a house, but it's not so good news if you're thinking about selling your house. But there's one more factor on the table that could flip the housing market again. Want to guess? Lower mortgage rates. Potentially. The Federal Reserve Bank is now seriously considering lowering interest rates to stimulate the economy and to stimulate the housing market. That's why in this video, I want to break down what's happening in the housing market so you have a better idea of what might be coming, because things are changing very quickly. To understand where the housing market's going, you have to understand where we've been. Let's assume you wanted to buy the median house in America. If you bought this median house in America after the pandemic in 2020, you were in a buyer's market because nobody wanted to buy a house. Nobody wanted to leave their homes, so you had a lot more leverage as a buyer. The median house in America in 2020 after the pandemic was around $387,000, plus the average mortgage rate in 2020 was 3.4%. That means if you put 20% down, your mortgage payment would have been around $1,373 a month. By 2021, the housing market flipped because people weren't as scared to leave their houses and people wanted to take advantage of these low mortgage rates. Now everybody and their moms literally wanted to buy a house, and they were willing to bid for those houses. If we enter a recession, a slowing economy, we could see lower mortgage rates, which would then boost the housing market in terms of demand. The other reason is if we just keep waiting until things get calmed down with inflation and tariffs, and then the Federal Reserve Bank says it's time to cut interest rates. Which one is it going to be? I don't know. But those are the factors that you want to pay attention to. So if you're thinking about buying a house, the thing that I'm going to leave you with that I always want you to remember is buy a house you can afford. Don't try to time the housing market, because what I believe is that the house that you live in is not an asset, it's a liability. If you treat it like a liability, now you can work on building real wealth outside of just the house that you live in.
Do me a favor and hit that YouTube tip jar. Hit that like button. Like that. Thank you so much. And I would love it if you subscribed. I could really use some subscribers. So help me out. Talk to you soon. See you next week.